Gentlewoman will proceed.
Thank you very much, Mr. Chairman. As you know, this bill creates a Consumer Financial Protection Oversight Board to advise the director of the CFPA on the consistency of proposed regulations with prudential, market, or systemic objectives administered by the agencies that comprise the board, the overall strategies and policies in carrying out the duties of the director, and actions the director can take to enhance and ensure all consumers are subject to robust financial protection. However, I am very concerned about the lack of a consumer voice on this board. I'm also concerned about the lack of diversity among the board's members. Given the important responsibilities of the board, I believe that it should be expanded to include those who will be directly impacted by its policies. My amendment would require the president to name 5 other board members from the fields of consumer protection, fair lending, and civil rights, or representatives of depository institutions that primarily serve underserved communities, or representatives of communities that have been significantly impacted by higher-priced mortgage loans. My amendment would also provide that no more than 3 of these members can be from the same political party. This would ensure that different perspectives are included as part of the board's conversations. There's a precedent for including public and private actors on an oversight board. For example, the FDIC's board consists of 3 persons nominated by the president, in addition to the heads of the Office of Thrift Supervision and the Office of the Comptroller of the Currency. The Overseas Private Investment Corporation, an agency which supports U.S. government investment in emerging markets worldwide, fostering development and the growth of free markets, has a board of directors with 15 members, 8 from the private sector and 7 from the federal government. I think it is worth noting that the Federal Reserve Board, the board responsible for our nation's monetary policy, consists entirely of private persons appointed by the president. Over the last 2 years, we have seen firsthand the impact of foreclosures on communities, small banking institutions, and our constituents. We've seen how predatory financial products like subprime credit cards and subprime mortgage loans were targeted to minorities and low-income consumers. In order to ensure that this doesn't happen again, consumer protection groups, fair lending and civil rights groups, institutions that primarily serve underserved populations, and representatives from communities that are impacted by predatory loans must have a seat at the table. I believe this amendment improves this otherwise very good bill, and I hope that my colleagues can support it and the underlying legislation. And if you take a look at the existing board, you can see exactly what I'm talking about. You would have the chairman of the Board of Governors, the head of the agency responsible for chartering and regulating national banks, the chairperson of the Federal Deposit Insurance Corporation, the chairman of the National Credit Union Administration, the chairman of the Federal Trade Commission, the secretary of Housing and Urban Development, the chairman of the Liaison Committee of Representatives of State Agencies to the Financial Institutions Examinations Council, and it certainly does not include the kind of representation and diversity that I think would serve this entire country. I would ask for an aye vote on my amendment.
Is there further debate? The gentlewoman from Minnesota.